I think Bitcoin will be over 250,000 by the end of this year or next year.
What's going to drive that, do you think?
What'll happen is that the tariff stuff will be a dud, and then people will realize that the world is willing to negotiate. And it's really just U.S. versus China, and a lot of people will side with us. Some people side with China. The markets will stabilize a little bit, and they'll get used to the new normal. And then the Fed will lower interest rates, and then you'll have a lot of fast, cheap money, and then it'll pour into crypto because it'll get reignited by the market structure bill and the Magnificent Seven entering in the stablecoin bill. So it'll stall for probably the next 3 to 5 months, and then you'll have a huge wave of speculative interest come probably August or September into the markets, and that'll carry through for probably another 6 to 12 months.
The crypto markets are quietly brewing the perfect storm for a historic price explosion. As global trade tensions stabilize into a new normal of US-China competition, the real action will shift to monetary policy. When the Federal Reserve inevitably cuts rates later this year, a tsunami of cheap money will flood the markets. But this time, that liquidity won't just recycle into overpriced stocks. It will ignite the crypto markets like never before. Charles Hoskinson, the visionary behind Cardano, sees Bitcoin blasting past $250,000 within the next 18 months, and the roadmap to this staggering target is clearer than most realize. The ignition switch? A powerful combination of regulatory clarity from long-awaited market structure bills, stablecoin legislation, and the accelerating entry of tech giants into Web3. After a summer of consolidation, expect the dam to break around August or September as institutional capital meets retail FOMO in a perfect storm of speculation. This isn't wild conjecture. The foundations are already being laid. With Bitcoin ETFs vacuuming up supply and traditional finance quietly building blockchain infrastructure, all the pieces are falling into place for what could become crypto's most spectacular bull run yet. The smart money isn't asking if this rally will happen, but how high it might go. For investors paying attention, the message is clear. The next 12 months could redefine wealth in the digital age. Let's watch more clips from Charles Hoskinson's explosive interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
When I first started crypto, Bitcoin was under $1. I want you to go from $1 to $30, down to $4, up to $256, down to $80, up to $1,200, down to $250, up to $20,000, down to $4,000, to $68,000, down to $25,000, all the way up to $100. I've watched it go up and down, up and down, up and down. And, you know, the macro, it changes. We've lived through Obama, we've lived through Trump 1, we lived through Biden, now we're in Trump 2.
Yeah.
Presidents change, macro changes. Really the question is, every generation, are we gaining users, are we gaining liquidity, and are we gaining utility as a system? And so the thing is, when I first started, we had less than 1 million people in crypto. In fact, there's less than 100,000 people in crypto globally. Now we have 550 million people. You look at Argentina, there's a $700 billion economy. 1 out of every $7 in their economy is in crypto. There's $100 billion in crypto there. Think about that. Vietnam, 32% of the economy is crypto. 32% of people hold crypto there. In Nigeria, it's 25%. So you have nation states adopting it. You have massive amounts of wealth that's entered the space. So while you have tariffs, that's a ephemeral concern. There's going to be a trade war for a little bit. What ends up happening is crypto benefits in the long term, because geopolitically what's happening is we're moving from a rules-based international order to a great powers conflict. Now, we're kind of young, so we spent our entire adult lives under a rules-based international order, but our parents and grandparents, they lived under great powers conflict. It was the United States and the Soviet Union going at it. So it didn't matter what the trade deal was. It didn't matter what the rule law was. If the Soviet Union wanted to do something or U.S. wanted to do something, they just do it. And now we go back to great powers conflict. If Russia wants to invade Ukraine, it invades Ukraine. If China wants to invade Taiwan, it's going to do that. So treaties don't really work so well, and global business doesn't really work so well there. So your only option for globalization is crypto. If you want to do business with countries the United States doesn't like, or Russia doesn't like, or China doesn't like in a global commons, you can no longer do that through treaty organizations or legacy banks or things. You can only do that through crypto. So when you take that, plus the new laws that are being passed, like the market structure bill and the stablecoin bill in the United States, and where MiCA is solidifying, what's going to end up happening is the big guys, the Magnificent Seven, are going to come into crypto, and that's going to bring 3 billion users into crypto. You're going to have a cryptocurrency wallet in your Android phone. You're going to have a cryptocurrency wallet in your iPhone. You're going to have a cryptocurrency wallet Windows, and they're going to be using stablecoins. It's not because Papa Satya over at Microsoft is like, boy, I love crypto. He hates paying fees. If you're Microsoft, you got people in 150 countries, and you hate some local bank in Bangladesh or Pakistan or someplace charges you 5% here or 10% here. You want to get rid of that whole thing. So why not pay them in stablecoins, Windows to Windows, and you're your own bank. Plus, if they're issuing that token, they could wake up just like Tether does and get $20-30 billion a year in yield from treasury bills. So Microsoft wants to be in that market. And Facebook tried and they got regulated out of it. They'll come back once the stablecoin bill and the other things. So when you look at the macro and you widen the aperture, we are a dominant force in a great powers conflict, and we're a dominant force with the Magnificent Seven coming on board. And also the real world asset revolution is going to be huge. That's $10 trillion that's going to be entering the cryptocurrency.
But do you think the Fed has room to move if these tariffs cause higher inflation in the US?
Well, of course they can. They can do whatever they want to do. It's the Fed, right? And also, it's not intrinsically clear how inflationary the tariffs will be. There was an MIT report that came out, I think it was from the first Trump administration, where they looked at the 2018 tariffs. And even though there was a 10%, 25%, depending on the nature of the tariff, the real inflation was only about 0.7%. So it's a very complex thing when you look at tariffs and prices and all these things, because people can switch inputs, people can make side trade deals, people could domestically manufacture. There's also stickiness in inventory, so people may have stockpiles of things that they run down for a little bit. It's a game of chicken that he's basically playing, and a lot of people are going to renegotiate. And I think they'll get to a point where they're comfortable with the new normal. There will be some price increase, but the question is, is that going to be much more than what we've been encountering with inflation already? I mean, the real inflation rate has been probably 5 to 7%, when you really think about it, especially if you look at indexes like Trueflation over the way that we currently do it with the legacy systems, with legacy metrics. Because, things like oil are important. Beef is important. Maybe we should price that in with inflation. So it's a nuanced thing. And what the media likes to do is they like to say, it's the sky is falling and everything is destroyed and the whole economy, we're going into a depression and it's Herbert Hoover and all this other stuff. It's like, wait, Microsoft's going to disappear and Facebook's going to disappear and all these innovations in AI are just going to go away and all the humanoid robots are going to go away and people are going to stop buying our weapons and these types of things. No, it's a big, diverse, extremely intricate global economy. And just because tariffs are coming, people aren't going to stop consuming things and people aren't going to stop buying things.
Bitcoin's journey from under $1 to a potential $100,000 has been a wild ride. As global macro conditions shift with changing presidencies, the key question remains: are we gaining users, liquidity, and utility? Today, over 550 million people are involved in crypto, with countries adopting it at remarkable rates. As major corporations and institutions enter the space, crypto is set to become a dominant global force. The question isn't if, it's when. The shift in U.S. crypto policy is undeniable. From an administration suing exchanges to one now embracing crypto through legislative action, the landscape is changing fast. Lawsuits are unwinding, and major advancements like a strategic reserve and crypto regulations are in motion. Bitcoin, once a speculative asset, is becoming a critical tool for governments and institutions, with stablecoins expanding the US dollar's reach globally. As Bitcoin DeFi grows, it's poised to outpace Ethereum and Solana, creating a new frontier for crypto's future. Let's watch more clips from the interview.
We went from Joe Biden with Scary Gary literally suing every single exchange, living in a Kafkaesque anti-clarity world, to a president who said he was going to pardon Ross Ulbricht, he did it. To a president who said he was going to create a strategic reserve, he did it. To a president who said he's going to create a bicameral working group and a crypto czar to pass cryptocurrency legislation, it's going to be done this year. Every lawsuit has been unwound that's of substance. The Coinbase lawsuit, the XRP lawsuit, the Kraken lawsuit, the OKX is settled. The industry's healing, and it was horrible under the Biden administration. So I appreciate that some people are underwhelmed. I think that comes from sour grapes because they expected a bull run. But it's not going to happen right now. There's too much stuff going on. There's too much uncertainty going on. There's still a war in Ukraine. There's still a war in the Middle East. There's a lot of fear over trade. There's great powers conflict. Crypto's not immune to the macro, and we have to get through all of that macro and we have to kind of figure that stuff out. So after we get about 6 months in, 12 months in, we'll start getting some more stability. We'll start getting some more regularity in things. And then at that juncture, I think then we can start taking advantage of the legislation and the structural stuff. As for the U.S. Reserve, going from we're going to divest 212,000 Bitcoin and the government's going after crypto to the government's now going to hold it and we're going to try to find a legislative framework to buy it over the next 3 to 5 years. That's a massive leap forward. And so I don't know what more people want out of this. It's as good as it gets. If anybody asked me, I would have said Bitcoin is probably the way to start. You need to create a rule system for inclusion and exclusion for this. But I wouldn't say it has been discounted or removed. It's just the government holds more than 100 cryptocurrencies through civil asset forfeiture. And so the first step is to say, okay, the things the government already holds, just don't sell that. And then a broader question is how should the government interface with the market to buy it? I think probably what they should do is purchase through indexes like Coinbase 50 or these types of things, because then you already have kind of everything figured out. You have the balancing figured out, and it just becomes a strategic asset that you purchase and hold. Otherwise, you have to get into a rating and scoring, and there's a lot of really complex questions you have to answer, and also the market disruptions. If the government goes and rebalance its portfolio and sell, catastrophic for the market. Or if they purchase, you saw with ADA, it was like 71%.
So buying an ETF kind of product?
Yeah, exactly right.
Like
so I think Coinbase 50 or these types of things are probably the way to go if they want to take a position. And it kind of solves and sidesteps all those difficult questions of rating and scoring and balancing and these things. You're just holding an asset. The other thing is, does the government want to hold it from a speculative viewpoint or do they want to hold it from a utility viewpoint? Because these are also fuels to do things. Like you can run a nation's elections on Cardano. So you could buy ADA to basically use to pay to run national elections, as an example, or whatever you want to do. Stablecoins are a way for the U.S. government to expand the U.S. dollar into jurisdictions they can't touch easily. So, you look at El Salvador, it's a dollarized economy, and you get stablecoins, and you have U.S. dollars basically floating around, but it's a digital asset through a third party. Same for the Middle East, same for Africa. So, and Central Asia in particular, like Mongolia, Kazakhstan, other places. So I think the U.S. government, all they really have to do is just open the floodgates and let people dollarize, and you extend the U.S. dollar into places where it doesn't normally touch. And actually, it's a big competitive hedge against the digital yuan. So really where stablecoins are going to be most useful is against Belt and Road and that whole initiative and the digital yuan initiative. Bitcoin now has the ability to pay yield. Because people can flip a switch, they can turn on Bitcoin and DeFi, and they get yield from their Bitcoin. Nation states are buying Bitcoin, ETFs are buying Bitcoin. There's too much retail interest in it. There's too much structural liquidity in it. It's really a question of can they get a smart contract layer? And because of Taproot, they can. So Cardano's playing very aggressively with Bitcoin DeFi. We're trying to be the DeFi mode for Bitcoin. But there's other people chasing it as well, like Stacks and dozens of other projects. There's already $5.8 billion in TVL from the Bitcoin side. They're not even trying. So when you pull that lever and you get 5 or 10% of the supply involved in that, that'll be larger than the entire market cap. The TVL will be larger than the entire market cap of Solana or potentially even Ethereum. It's 4 times the size of Ethereum and Solana, the market opportunity there. So I think it'll have to be done through layer 2s and through other systems, but Bitcoin will do that because people want the money.
Bitcoin has been on an upward trajectory, seeing a 33% increase since the 2024 halving, despite the ongoing global trade tensions. The halving, which reduced Bitcoin's block reward by half, introduced greater scarcity into the market. This, coupled with institutional investments and Bitcoin ETFs, has accelerated the typical 4-year Bitcoin cycle. According to analysts, the 2024 halving could lead to Bitcoin surpassing its all-time high, potentially breaching the $90,000 mark soon. Emmanuel Cardozo, a market analyst at asset tokenization platform, Bricken, mentioned that institutional investment from firms such as Strategy and Tether could speed up Bitcoin's traditional 4-year halving cycle. He added, for the 2024 halving in May, that puts the bottom around Q3 this year and a peak mid-2026. But I think we might see things move it a bit sooner because the market's more mature now, with more liquidity. This accelerated cycle is being further fueled by the growing institutional presence in the market, a trend that Charles Hoskinson, the founder of Cardano, believes could push Bitcoin past $250,000 in the next 18 months. With Bitcoin ETFs absorbing supply and the market maturing, liquidity is increasing, which could result in a perfect storm for a massive rally. Hoskinson emphasizes that regulatory clarity, such as stablecoin legislation and the market structure bills, is key to unlocking Bitcoin's full potential. As more institutional capital enters the space, a confluence of factors could trigger a historic price explosion. Despite the macroeconomic uncertainties like global trade wars and escalating tensions between the US and China, Bitcoin is becoming a critical asset for both governments and institutional investors. As we move towards regulatory clarity and increased adoption, Bitcoin's role as a store of value and speculative investment is becoming clearer. With these developments, crypto is on the verge of experiencing its most explosive bull run yet. The next 12 months could redefine wealth in the digital age. As we wrap up, what role do you see stablecoins playing in Bitcoin's growth over the next 12 months? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.